All right. Merry Christmas, everyone, or Merry Christmas Eve. We won't be joining each other tomorrow, so Merry Christmas to you all those of you who are joining. It has been an awesome week for the stock market. We can see that we have rallied into Christmas, pretty much coming through with that Christmas or Santa rally that everybody has been expecting. This morning, quiet morning, it looks like a pretty flat open for the market. Let's pull up our heat map and we're going to see that, let's know what this is. There is not much that seems to be moving higher. We have DEC, Nike. Nike's moving higher. We'll talk about why in just a second. ASTS is moving higher. We'll talk about why in just a second. Novo is still benefiting from that news of they getting their drug approved. Let's see what else is moving. UPath. So let's go ahead and figure out why these stocks are moving higher. Let's start with UPath. This is one of the biggest movers today. We're going to go ahead and zoom out. Let's pull this up. And let's look up UPath on our trusted live news from Thinkorswim. So let's pull up Thinkorswim and let's look up Path and let's see what the latest is on Path. It doesn't look like there's anything specific. Let's see if there's anything on the internet. Path stock. It looks like UPath is surging. Oh, here we go. Oh, wow, okay. So here's the latest news. So UPath is surging because it looks like the automation software company is set to join the S&P 500. I'm sorry, the S&P Mid-Cap 400 Index. So this is good news for them. It's kind of like a check mark on the bullish side. It reinforces them as a company, especially for a small company like UPath. This might be a good move for them next year. Let's see how UPath has been doing over the last 12 months. And if it's something that we want to pursue next year, I mean, this is a pretty strong catalyst. You could see that the market is reacting or was reacting positively in pre-markets. Before pulling back. So over the last 12 months, UPath's had a low of $9 and a high of $19. So a pretty broad range. That's a 100% move. And it looks like it's ending the year slightly higher than it started it. So it started at around 13 and now it's ending around 16. So investors saw a little bit of a gain on their stock or on their holdings, but not enough to say it was a really stark difference. But let's see if UPath had been doing something over the last 12 months that sets it up for a good 2026. Because the stock may have not gained, but the company could have improved, making it a better trade coming into next year and potentially over the next 12 months. So over the last 12 months, we see that UPath has actually increased revenue by 5%, 6%, 15%, and 16%. So pretty good. And what we want to notice here is that the later two quarters have been better than the first two quarters in terms of revenue growth. So that's a promising sign for UPath and potentially sets it up for even a better 2026. You see the stock has been flat for 12 months, literally almost no return to investors. But the company itself has been improving and growing revenue. Net income, inconsistent over the last 2 years, but over the last 12 months, it has been largely on the positive side. So that's a good sign. Balance sheet, pretty decent balance sheet, still a pretty small company. And free cash flow is positive, which is a really healthy sign. Software companies, especially after a few years of actually commercializing their product and services, they need to have free cash flow because they have a fierce competition and their competitors usually have free cash flow because software has to have lower overhead. I mean, you're selling software. You're not Boeing where you're operating billions and billions of dollars in factory costs. Okay. Let's look at UPath over the last 3 years. So we can see that this company has had a rough 3 years. Literally, so we look back 12 months and UPath has barely returned anything to investors. And now we've looked back 3 years and UPath has also not returned much to investors. But it looks like it has been trying to gain a little bit on that chart. It may have been just a victim of its own demise, kind of right here when it grew too far for its own good. But UPath slowed down, they settled down, the company worked on itself, and they have been pushing towards automation, especially in that in the automation that AI agentic automation that a lot of companies are moving towards right now. So they already have the customer base when it comes to automation, and now if they include AI agentic automation, which is kind of the same thing, but it's just a fancier name, that may attract their clients. It could be an upsell for them, and it could become a new income source for them over the next 12 months. So that's something to watch for over the next 12 months. UPath joining the S&P 400 mid-cap index is a great news for them at the start of 2026. This is the kind of catalyst that can potentially carry them over the next few weeks. Definitely one to add to the watch list, but I'm not going to be quick to buy this one. We'll put a resistance at 1737 and maybe perhaps catch a breakout play. But we will keep an eye on earnings. Their next earnings are scheduled for March 18th. We want to see if the company can have strong commitments for the next 12 months to potentially maintain that same revenue growth that they've had over the last 2 quarters. If they can do that, that could be a strong enough catalyst to keep continuing to carry them. This is a super cheap company in terms of the stock price. Like the actual price, $17 is pretty good. So we can see high returns very easily on strong positive catalysts. All right. Let's see what else is moving this morning. So we have Nike. Nike is moving this morning. For those of you who are just joining us, we're going over the biggest movers this morning. So not top gainers, pre-market movers. Nike was one of them. UPath was one of them. So right now we just went over UPath. We're going to go over Nike, and then today's schedule looks something like this. Hopefully, as long as we don't get disconnected like yesterday, I'm hoping that things work out a little bit better today. We want to go over these companies right here: NVIDIA, AMD, Meta, Palantir, and Applied Digital. We're going to go over them at these times on Eastern time. But for now, let's go through the pre-market movers. Nike being the next one. Let's see what's happening with Nike. We're going to go to our TradingView platform. Nike. Let's actually just remove this and let's do this. So you can see Nike cleared a gap up today. The stock is up 4.2%. And why is the stock up? I believe it was somebody bought shares. Apple's Cook. So Tim Cook, the CEO of Apple, purchased Nike shares. He doubled his bet. And it looks like it was a $3 million stake. Good news for Nike. Potentially makes them a hot commodity. I know that a lot of retail watches Nike, but the stock has been so brutal. I mean, it has just been brutal over the last 3 years as the company continued to sell off. They made some risky decisions. They decided to cut out the middleman. They decided to try to go straight to consumer, try to cut out Foot Locker and all the sporting goods stores, and it backfired tremendously. They missed the Run Club craze that On Holdings and Hoka got on. I mean, if you compare Nike's earnings to Hoka, I'm sorry, not Hoka, Deck, which owns Hoka, and they also own Uggs. You'll see that over the last 2 years, 3 years, these guys are increasing revenue by 15, 18, 16%, even 23% in 2021. On Holdings, if we look at On is 32%, 55%. I know this is a younger company, so it's easier to penetrate markets when you're a hot new commodity, but Nike missed out on that run club phase nonetheless. Nike, on the other hand, super flat revenue. It even fell 10% in 2024 as people switched to your Hokas and your On and your other new names that came up. New Balance also re-entered the scene. I mean, there has been a lot of competition, which is the downside of being a clothing business and being a company that needs to reinvent style all the time. It's hard to maintain the market, but what Nike has done really well is they've maintained a really strong footing in sports, which is a continuous revenue stream for them. It's not a company that's going to go to zero. It's just a company that's going to have bad years. You can look back and you see that revenue varies from year to year. It's just about what's in right now. If the company can capture big contracts, if they could sign someone special, if they can and if they can reinvent themselves in a way that continues to appeal to consumers. Nike has enough purchasing power to withstand the tariff impacts. It looks like the company, as far back as we could see, has been profitable. The company can eat some of those tariff costs and still be okay. And in terms of balance sheet, the company has 13 billion in positive equity. Free cash flow is positive, and overall short-term and long-term liability looks healthy. So all in all, Nike is still a good company, but it's just hard to stomach that investors are willing to pay a 33 price to earnings ratio on a company that's not posting any growth right now. I think we need to see Nike post multiple quarters of growth. The 1% and 0.4% last 2 quarters is okay on the revenue, but the net income is just brutal, you guys. 30% drop, another 32% drop. It could be tariff impacts, but still, as an investor, would this be a business that really appeals to you, especially when there are businesses that are posting the 20 to 30%? Now, that is given the numbers right now and based on no new catalysts. Tim Cook buying shares, obviously a good thing, but he may not necessarily have his timing right. We've seen plenty of great people buy stocks at the wrong time, or too early or too late. Nike is a good long-term potential, but is this the bottom? Hard to say. It could be the start of a bounce, but for a full-on reversal to continue holding, Nike needs to turn around those numbers. Without positive revenue growth, the business is not growing, and it's not going to appeal to investors, especially at a 33 price to earnings ratio. So they need to improve net income, they need to improve revenue, and I think Nike could be set up for reversal, but hard to see in the first half of 2026. It could be the second half of 2026. 6:50 in the morning at my end. So in 10 minutes, we're going to go over NVIDIA. And then throughout the day, we're going to go over these stocks. In between, though, we're going to just kind of go over the market and see what's happening. Let's take a break for a second and go back to SPY to see how the overall market is doing this morning. It looks like we're pushing, continuing our rally from yesterday. Everything looks rosy. Market Watch looks green for the most part. Big Tech is taking a little bit of a hit. We can see that NVIDIA is down, Microsoft is down, Intel is down, Amazon is down. So there is a little bit of mixed markets this morning. Micron, of course, is up, continuing its massive earnings rally, potentially setting up to move towards 300 over the next few days. This thing is just a beast. And then let's see what everything else is doing. Okay, so mixed markets, nothing really standing out. Boeing continuing its rally. It's had a phenomenal week. We are in Boeing. We're waiting. We've been in shares for a very long time now, and we're very positive on those shares. And then we're also holding contracts in Boeing. So very good returns there. I'm super happy to see Boeing go because it's just one of my favorite stocks. In terms of what its potential is. All right, so back to the market. Like I said, you guys, bear with me. Another 8 minutes or so we'll cover Nvidia. Right now we're just kind of going over the market. I haven't had a chance to really look at my holdings and the Hyperstocks holdings this morning. That way I can make some changes if necessary, or add anything if necessary. LMT seems to be moving. So Boeing is moving, Lockheed Martin is moving. It looks like defense in general is gaining. This could be because of Trump's push towards defense. I think 2026 is going to be a huge industry growth possible in 2026. So I think 2026 is going to be really good for defense. We already know that Trump is trying to improve the Navy. He wants to build nuclear submarines. I know those plans sound super ambitious, especially with his only time left in office over the next 3 months. But nonetheless, there are billions going towards military, and I think it'll for sure boost these stocks next year. So NOC, LMT will actually just NOC, LMT, Boeing 2026 highlights. So we'll write that in here, and then we'll probably add some of these to our official watch list on the Sunday list that we send out. All right, let's see what else is moving this morning. I'm just reviewing our Hyperstocks holdings here to make sure that everything looks good. So Velo, one of the stocks that we're holding, it looks like it's pulling back this morning. But, you know, if you look at the overall chart, the stock still is within that breakout. It's not really something to freak out over. First of all, that 1265 mark, which dates back to this rejection here, was a huge breakout point for them, and they're still above it. But even if we pull back, it'd still be holding that 10-day moving average. Now, you guys know I'm both a fundamental and a technical trader. And in terms of the fundamentals on this one, the company is signing contracts. They're only in the hundreds of millions. It's not $1 billion company by any means. But the company is promising because they're working with SpaceX and they're working with Anduril. So we're not super micromanaging this stock. It is a high-risk stock as we labeled it in the setup. So, you know, if you're over-positioned, maybe scale back. But it's a pretty decent holding so far. On FinViz, we can look up Velo's further technicals. We can see that there are only 8 million shares available to the public market, so extremely low float. And then 13% of those stocks available to the public market are shorted. So this is a super strong contender for a short squeeze. The only threat, or the biggest threat I could say we could see from here, from having such a small short float or shares float, is they potentially could do a public offering, and a public offering would dilute the company's shareholdings shares, which can potentially cause a drawdown. But even if that drawdown comes, the fact that these guys are working with SpaceX on their newest rockets, and 3D printing being such a hot trade. I mean, look at XMTR right now. This is a stock that we found at $28, and now it's sitting at $62. Huge name in 3D printing. Definitely does more than Velo does, and more recognized around the globe. But nonetheless, 3D printing is a hot commodity, and I think it will continue being hot over the coming years. And Velo is a strong contender, and it's a strong contender on both the technicals and the backlog end of it with such reputable clients. So I know we're pulling back. 9% drawdown is not easy to see, but nonetheless, not one to micromanage, especially one that you probably didn't go big in. You know, this is not a company to go big on it by any means. It's a cheap stock, high risk, high reward. It can be strong. It can return strong returns easily on more positive catalysts. All right, 6:56. It's almost 10. We're going to go over NVIDIA at 10 a.m. We're going to do a fundamental analysis. We're going to look at the technicals. We're going to create some lines of support, resistance. We're going to see where it can potentially go before the end of the year. So we'll pull up NVIDIA in just a little bit. In the meantime, let's go back to SPY and see how the market is doing. Looks like we're taking off this morning. So very close to our all-time high mark of 691.24. But Q, the highest point was 689.70, and we're already there. No, if you got to check pre-market hours and post-market hours, you can see that on December 10th and 11th, we made a high in post-market at 691.24, which is going to be the breakout point we need to focus on for SPY to clear that level and have a blue sky breakout into record highs. Do you guys think you could do it by Christmas? Do you guys think we could do it by end of year? Do you guys think we can hit 700 by end of year? Let me know in the chat. If you think we can hit 700 by end of year, just let me know in the chat. I would love to hear what you think. I think we can, but that's just me being super optimistic. I think we'll at least see 699. Because it's just we're looking good. There's nothing that could stop us. We've already got past the government shutdown. We've gotten good economic data. Labor market is not as bad as we think it is, and regulation is loosening. Capital markets are moving. Interest rates just came down. So there's a lot of positive momentum, and I think we can easily just rocket higher as long as we break that all-time high. Brennan, what's up, Brennan? Or is this Tony? The party is here. Everybody's here. All right, guys, we're gonna go over NVIDIA in just a second here.